Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt of Pacific Private Money. And when we cut to the third commercial break, we asked this trivia question. What 1972 movie's theme song, There's Got to Be a Morning After, was sung by Maureen McGovern? Hint, the film was remade in 2005 and was about an ill-fated voyage. Mark, you raising your hand. What's the answer to that?
Well, it wasn't the ill-fated voyage of Gilligan's Island, but it was the Poseidon Adventure.
That's correct. Okay, Mark, what is going on in real estate? You said you met someone very interesting today.
Well, I did. I had a meeting today with a real estate broker in Marin County, and I was looking at a house that she's looking at taking a loan on. And she said, oh, by the way, I heard in a conversation with a friend that real estate in the Bay Area was going to go up 10% next year. And I got to tell you, at first I thought she was joking, and I started laughing. I thought, based on the drumbeat of the information that we're hearing about the market, declining, through 2011, particularly maybe the last 6 months, that's the first time anyone has ever suggested that to me. Although,
or even suggested an increase.
Well, that's just it. And when first thing I said, well, you got to find out what the source. So please get back to me on that. I don't have that yet because it just happened today. But it's interesting. The market right now, and we're in the fourth quarter of 2011, and this summer was disappointing. I know for a lot of folks trying to sell real estate. It's been disappointing even in the fix and flip market. We've watched the returns and the yields that you can make fixing and flipping get a little bit compressed, particularly for those people who have didn't buy properly, and maybe they over-improved the property. So, so people have been losing money. Although, at Pacific Private Money, we're making, hard money purchase loans to guys that are actually doing still quite well in this market. But I spoke with one of my clients, one of my borrower clients, who did a beautiful job on a remodel in Oakland, and unfortunately they made a mistake by not selling it to the first qualified buyer that came around with a reasonable offer, and that was about 8 weeks ago. And now they're looking at their best offer right now is about $50,000 less. We're talking about a price differential of I think it was like $480 was the offer before. Now they're down to, well, it's actually worse than that. I think it was $415. So actually a substantial price reduction. And unfortunately, a lot of people are seeing that right now, and so we're in a really bizarre market right now where there are just not a lot of buyers out there. And so if you are a buyer, what I guess your buyer's agent is telling you is to make really super lowball offers, because there's a certain hint of desperation right now, so how does that affect what prices might do in 2011? I think that we're in an aberration right now. I think pricing right now is not market. It's driven more by the fact that
fear, right?
There's fear, and there's people who want to unload, and maybe they don't know what's going to happen in the next 6 months to 12 months. And so there's an opportunity for buyers to take advantage of that fear. But I don't think we're in a real, the market is just, I don't even know what to call it. It's insane. I mean, I've had more people tell me, what do you make of this market right now? I don't make anything of it. It doesn't make any sense whatsoever. So in that light, actually, from some of the prices you can get for remodeled property today, I don't think those prices will hold. So I do think there are markets in the Bay Area that will have a bump in the next 6 to 12 months that could easily be 10% above what they are right now. Because I think we're at a trough, and I don't think that it's likely to get that much lower.
Well, let me ask you on that one specific case that you're talking about. You said that was a borrower client?
It was a borrower client.
How much did you guys lend on that property?
Our exposure on that property is about $250,000.
Okay, so for the unfortunate borrower, he lost potentially $60,000. Well, you guys are still well protected.
Oh, absolutely. My lender client in that loan is extremely well protected. I would kill to have that house for $250,000. It's a gorgeous remodeled home in a nice neighborhood of Oakland. But this particular borrower client, could have made well over $100,000 profit after all expenses and holding costs, and instead now, because they didn't make the right choice when they had an opportunity to, now they're going to make less. They're still going to make a profit. They're not going to lose money by
hopefully, is he accepting the $415 offer?
They're considering.
They're considering it. Hopefully, it won't go down further. But And what's the interest rate that your company is charging that borrower?
That loan is, the borrower's paying 11%, and the investor, the person who funded that loan, is earning 10%. So that's one of our better returns that our investors are, excuse me, getting on a loan. And that's only because it was intended to be a short-term buy and fix and then flip. It was intended to be less than a 12-month loan. So on those short-term deals, oftentimes we can get a
little higher rate. Yeah,
higher
how long
rates.
has that loan been in existence?
It's been under a year, but it's getting close. Next spring it'll be.
Wow, so your investor has $250,000 in this house that's worth, we know it's worth at least $415 now because that's the most recent offer, and he's getting 10% on his money.
10% on $250,000, well secured by real estate in the Bay Area.
That's pretty good return, I would say.
It is. We've been talking, you know, and to kind of, you know, get back to what we were talking about earlier with our guest, his argument was that the smallest percentage in costs over time add up to a lot of money. You know, my whole, purpose for in Pacific Private Money for our investors is to help people retire successfully. And one of the ways we help our clients do that is by taking a portion of their savings, and rather than having all of their retirement funds invested in what's called traditional investments like stocks, bonds, mutual funds, etc., gold even, have some of that in real estate secured notes, because we can provide returns of 8 to 10% and do so with regularity. First position notes secured by real estate in the Bay Area, generally to real estate investors. These are not owner-occupied homes; these are investment property homes, and this way that they can, it's tough to retire successfully in this market given the interest rates we've had in the last 10 years.
Well,
so this is one way to boost the yield on the retirement funds.
And I can see advisors potentially calling you up and saying, look, you're going to get my client 10% interest. I wouldn't mind having you manage some of that money for us. That happens.
Well, absolutely, and I don't call myself an investment advisor, but...
Well, no, you're not. I'm talking about an investment advisor may say, listen, out of this person's $1 million portfolio, let's have $200,000 go over to Pacific Private Money because you're going to pay them 10% interest in that specific loan.
Well, we do have clients who are coming via their investment advisors, and but oftentimes clients are coming to us and saying, well, I've got these IRA funds, and I saw a seminar where I'm allowed to invest IRA funds in either real estate or real estate secured notes. Nowadays, personally with my savings, I'm very bullish on loaning money out secured by Bay Area real estate, which I think is on sale.
Yeah, I mean, I'd rather invest $250,000 at 10% with that kind of security than own the real estate and hope it goes up. I mean, that's what I would do for right now. And in fact, before we have to cut out too, make sure people know how to get a hold of you, because obviously that loan is not available anymore, unfortunately, because someone took it. But you have other loans that are available for people.
Well, we do, and at Pacific Private Money, we're one of the fastest growing private money real estate lenders in the Bay Area. We've done nearly 150 loans in 2011. Very few private loan originators in the Bay Area have done even near 100 this year. So one of the reasons why we're busy is I think we're providing excellent service to both our investor clients and our lender clients. And if you want to find out more about what it is we do, check us out on the web at pacificprivatemoney.com. We also have a new investor website that we just lit up the last couple of weeks. It's at pacificprivateinvestments.com. But you can go to either website, Pacific Private Money or pacificprivateinvestments.com, and learn more about the interesting and amazing world of trust deed investing.
Yeah, you can always go to bestofinvesting.com. And Mike, any last thoughts? Because we're going to have to cut out here pretty soon.
Well, I certainly feel that a well-diversified portfolio includes real estate in one form or another, whether that's trust deeds or whether that's your own home. I don't like to see my clients just in stocks and bonds. I think financial instruments significantly have had significantly good returns over many years, but I think a well-diversified portfolio includes a little bit of real estate.
And I'm not going to sit here and argue that you should be all in real estate, although I am, but that's my personal choice. But certainly, investing in real estate secured notes is a great way to boost the yield on your retirement savings.
Great. Well, guys, this has been a good show. Mike, we're definitely going to have you on again because we only covered just a scratching of the surface.
Sure.
Okay, thoughts for the day. Everyone should have a spouse because there are a number of things that go wrong that one cannot blame on the government. You like that? Okay, and one time I saw 6 men kicking and punching my mother-in-law. My neighbor said, "Aren't you going to help?" And I said, "Nah, 6 ought to be enough." No, I'm just kidding. I love my mother-in-law. She's good. And I want to thank my engineer, Hunter Hornstein, for orchestrating the show. Thank you. And also next week, we're going to announce the special trivia winner for the special contest. So tune in for that. Tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown and Mark Hanf, right?
Absolutely.
Wishing you the best of investing. So long.